and welcome to Follow the Money. I'm China Barachina. Let us explore the tools and insights you need to jumpstart your financial journey. The PSE keeps investors on their toes, from index rebalancing to sector plays in energy, consumer goods, and online gaming. What's the outlook and the stock picks and the golden rules for 2025? Joining us on Follow the Money is Franco Fernandez, Equity Research Analyst of Dragonfly. Hi, Franco.
Hi, thank you so much for having me. I'm excited to be here.
Sure, welcome to the show. So, Franco, let's start with what's your overall outlook for the Philippine Stock Exchange this remaining months of 2025?
So I remain cautiously optimistic for the rest of the year, especially when Ghost Month ends, though my outlook on the market has become slightly more bullish following the Jackson Hole Symposium, where Fed Chair Powell has indicated or signaled that a September rate cut is on the table, and as long as conditions warrant one. So the market implied odds for a rate cut in September have increased to 83% from 75%, reflecting growing conviction that the US is ready to resume its monetary easing. So with this backdrop, it provides the BSP with more flexibility to ease or cut its interest rates, supporting further economic activity and growth. And without having to worry about excessive pressure on the Philippine peso, since the US and Philippine rate differential becomes less of a concern as the Fed cuts their interest rates.
Okay, so yeah, Franco, go ahead.
And in my view, the local market has yet to fully priced in the full impact of the lower inflation, the lower interest rates, in both of stimulating the economy and allowing equities to possibly towards more favorable valuations. And I guess there hasn't been enough catalysts aside from the BSP rate cuts that would limit higher equity ratings.
All right. So, Franco, in terms of like year-end target, what do you have a certain target for this year for PSEI?
Yeah, I do. So our base case for the Philippines is between 6.8 to 6.9, supported by resilient consumer and government spending. And we need to stay within the target. And it has to be accompanied by the BSP's expected 50 basis point rate cut, which should modestly lead to better economic activity and outlook. And we need to see further stabilization of sentiment, which could come from the Fed rate cut that's in September. And then we do have a bull case, just in case things turn out better than expected, which is at 7,200. But that is more contingent on the return of foreign inflows in the market, because our PSE requires sustainable inflows to keep the index at high levels. So this would require stronger economic outlook, better investment opportunities, and we need more aggressive rate cuts, in my opinion, from the BSP, as long as the Fed sentiment is dovish, because that should trigger a positive shift or a positive inflection point in sentiment that will drive interest in our market.
What do you think is the stock that would most likely be affected in this bull target that you have?
I think the REITs are poised to stand out, as well as other high yield names, because the fact that these yields of strong dividend paying companies are still at like maybe 6 to 7%, it just makes sense to lock in those yields, because from 6 to 12 months from now, I gradually think that the dividend yields would normalize towards maybe 4 to 5%. So it just makes sense that high yield plays and the REITs stand to benefit the most from the rate cutting cycle.
Okay, so we go and zoom out a bit and see what sectors do you see leading market growth in the next 6 to 12 months?
I actually believe I do have some slides for the sector outlook. Yeah, maybe we can show it. But essentially what I have picked out are REITs, industrials, holding firms, and mining companies. So for REITs, pretty straightforward. I think it will outperform as the BSP sustains its rate cutting cycle. and the lower rates should support should support dividend plays and support expansion via asset infusions, especially if companies like Siri continue to fund their acquisitions through debt. As for the industrials, I favor utilities in particular because of their defensive characteristics and their attractive yields amid market uncertainty and volatility. So my picks, for example, would be Meralco, Mineral Water, and potentially Aboitiz Power. And for holding firms, it's because conglomerates such as Ayala Corporation and SM would eventually benefit from a catch-up trade as a true rate-cutting cycle happens, acting as high beta plays as market liquidity and sentiment improves. So we like AC and SM because they are a big part of the economy and are sensitive to rate cuts. And our last pick in terms of sector is mining, particularly the gold stocks. So gold prices have remained elevated around $3,300 per ounce. And with global uncertainties, we believe that these prices will be sustained.
So you don't think that it's still the peak of gold prices, Franco? Do you think it's not yet the peak?
Yeah, I don't think it's exactly. If we look at technicals, gold prices consolidating towards the up, and after Trump reintroduced more uncertainty targeting the Fed dependence, gold prices actually ticked higher today, and I think that's one of the reasons why stocks like OGP, PX, and APX rallied as a result of President Trump stirring political instability in the global markets.
Okay. So when you have already mentioned some of the stock picks, and but I am interested in when it comes to like getting a hot pick, how do rate cuts or hikes impact your stock strategy?
So with rate cutting, our dividend strategy, so in Dragonfly, we always focus on dividend growth investing, and given the current situation right now, we're tilting towards more high yields of fundamentally strong companies. As I mentioned earlier, we gradually believe that the yields will normalize to 4 to 5%. So it makes sense to lock in the higher yields now. But for our current holdings, we have been trading around the core position, locking in some gains as the market rallies, and then taking advantage of pullbacks as the market corrects, because it just makes sense to pivot between short-term volatility. So we would be selling around maybe 30 to 40% of our current positions just to maintain the long-term exposure, then buying back as yields become more attractive. And then at the same time, there's another potential play at hand. It's the potential catch-up trade between or among conglomerates, as I mentioned earlier during the sector out picks. So it's simply because these companies, these conglomerates, are deeply tied to the domestic economy. So we have groups like diverse groups like SM and Ayala Corporation with exposure to various sectors should outperform once the economic activity and the outlook gets going. Because if you look before, in contrast to this, during the higher rates, banks like BDO and BPI have outperformed. Now they are pulling back. So we expect leadership to rotate back to conglomerates at some point, making them a compelling play on a tactical basis.
Okay, so what is your personal favorite stock for 2025 that is in your portfolio that is actually, we can say, most performing stock?
For me, it has to be RL Commercial REIT or RCR. It's part of the D15 actually that we created, that Jared and I created. I believe we have some slides. Just to provide some context, we created the D15 to act as a guide for the investors. So we always pick out the best. And among the D15, I think RCR stands out the most because, one, we have the rate cut tailwind, and it currently has a trailing 12-month dividend yield of 5.5%, so still quite attractive. And then we have the 9 mall infusions, which include malls like Robinson's Magnolia. So we are expecting that starting this month, going on to the end of 2025, rental income should drastically increase with the infusions. And by the end of 2025, we're expecting dividend growth of around 3.34%. And then RCR also has a strong pipeline going in the next 3 years because they plan to increase their asset base by 300 billion. So that potentially makes them the most valuable REIT company in the Philippines, even ahead of a REIT. And lastly, this is more based on speculation. We believe that RCR is one of the top candidates for the next PSCI rebalancing in Feb 2026.
Okay. Well,
Yeah.
I thought
So
you were
there's
gonna
still
say
upside in my
JFC.
opinion.
I thought you were gonna say JFC actually. I'm just kidding. So, if you're gonna see, are there any undervalued stocks right now under retail investors that people are still overlooking?
I think, yeah, there are actually a lot of undervalued companies, but I don't think people are retail investors are overlooking any of them. I think the current macroeconomic backdrop warrants certain valuations, all because of all the political uncertainty, global uncertainty, and just the lack of interest in our domestic market has kept these valuations cheap for so long. So I don't think we're overlooking anything. I think the way to approach this is to be highly selective. I think the best approach is to follow the dividend plays and the momentum plays because that's where in a liquid market, that's where most of the attention will be at. So
Yeah.
we have recent outperformers like ICT, LTG, AREIT. Yeah.
So mentioning about dividend plays, what do you think about Globe and Smart as dividend players?
Oh yeah, so that is actually a very interesting topic right now, especially between PLDT and Globe, following the fact that the Konektadong Pinoy Act has lapsed into law last Sunday. So this does create a less favorable outlook for these two telcos and for the other telcos in the sector. So obviously, this bill is positive for consumers because it introduces new players, potentially offering better and cheaper services. But it does increase or make the competitive landscape more competitive and more difficult for incumbents. So players like PLDT, Globe, Converge, and Ditto have all expressed their concerns regarding this act, particularly about cybersecurity, infrastructure sharing, and the erosion of their returns on their capital investments. So for investors, it adds a lot more uncertainty. I think there's a bit more downside to both stocks given the latest technicals. Although both stocks have been great dividend payers, if I had to pick, I would pick PLDT because of their better track record, earnings growth, and fintech momentum following Maya's profitability. But going back again to the impact of the KPA, I think what investors need to watch out for now is how effective these companies, because these companies like PLDT and Globe have expressed interest in helping or influencing the drafting of the implementing rules and regulations in order to mitigate certain risks. So I think that's what to look out for in the next 60 to 90 days. And for the traders out there, I think this provides a tradable opportunity for smaller players in the sector like TBGI and Now Corporation, which I believe hit their ceiling prices sometime today.
Wow, I can consider that as fearless forecast. We're just warming up. Follow the money returns after a short break. Still with us is Franco Fernandez, Equity Research Analyst of Dragonfly. So, Franco, let's help those viewers that is just starting in the market. What do you think are like stocks that has consumer plays like RRHI or JFC for this year?
Okay, so I think there is opportunities in the consumer sector, although I would argue that you would have to be a bit more selective. So you wouldn't necessarily go for ASEN or RHI right now. I think there are better picks out there. So the reason why I say that is because given the lack of positive news in the local market, the soft sentiment, and the weaker outlook that has been published lately, the growth story of a stock and the and whatever factor makes it interesting or stand out becomes more important. So we want to look for certain for stocks or um, sec, um, company specific catalysts that would warrant an investment. So we would look at companies like Pure Gold because they have better technical momentum, better earnings growth compared to its peers like URC and JFC. And they do have better dividend growth and clear expansion plans. They're planning to open more SNR Pure Gold stores in the coming year. So that's one of the those are some of the reasons you want to look out for when you pick a consumer play, because they are very sensitive to the current events happening in the market with tariffs, with inflation. Yeah.
Yeah. Okay, so what's Dragonfly's take on the online gaming play?
Yeah. So our take on it is quite on the bearish side. So currently, the online gaming sector carries a lot of regulatory uncertainty and a lot of risk, especially from a tradable standpoint. And watching the hearing, it tells you that the Senate committee is very negative on the matter because of the social harm that it has done to the Philippine society. So they are not opposed to a total ban, although they are requesting stricter regulations and proposals from the BSP and the PAGCOR. So that's something we need to look forward to or look out for in the next hearing. And then we also have the presentation from the Department of Finance, which will be of interest because DOF Secretary Recto has favored stricter regulations than an outright ban. So it'd be interesting to see the case. But given the social harm that these senators keep mentioning, it will be a tough case for PAGCOR, BSP, and the DOF to keep online gambling active in the Philippines. So
Okay.
right now, I would avoid Plus and Bloomberry for now, although it seems from a technical standpoint that a lot of the selling pressure on Plus has been exhausted.
Okay. So do you see opportunities in infrastructure related stocks like MPI or EEI?
In terms of infrastructure, I think as economic activity improves and infrastructure spending ramps up, I think we have a positive impact on GDP and our overall growth outlook, which should improve sentiment. So in terms of infrastructure, I would always go for ICT, the port terminals. There's no other company like it. For DMC, for EI, I think there's opportunity, and Megawide and EI because of their order book, which has increased recently. So I think there's an opportunity in infrastructure, although the upside is not as large compared to the other sectors.
Okay. So Frank, recently FNI has been in the spotlight with its chairman Joseph C. arrested and facing deportation. How do controversies like this affect investor sentiment or stock valuation in the PEC, if you can comment only?
Yeah, so just quickly, yeah, obviously, when management faces an issue, a scandal like this, it's really not great for investor confidence. This always leads to an outflow of capital. And although one great thing to come of it is that it raises national security concerns, so that means I believe that agencies should or will start looking more into management after this issue. And it just does not bode well for the investment community here in the Philippines for something like this to happen.
Okay. So, Franco, we have so many familiar analysts in the Philippines, and I think you're one of the young faces. And I just want to ask you, in terms of your education and discipline, how did you start in this journey in the industry of the stock market?
Okay, so it started back in 2017, just after I graduated high school. I got into investing because of my grandfather, who is actually who trades a lot, invests a lot in the market. So
You grew up with it.
he would borrow my laptop back then. So that's how I got started. And now that I'm in Dragonfly, I'm thankful to be mentored by our CEO, John Carl Lim. And I've honestly learned a lot from him in terms of investing here in the Philippines, as well as trading in the US.
You actually are similar, even the way that you talk, because I know the guy, like I can see similarities, to be honest. All right, so if you, do you still remember the first stock that you bought?
The first stock I bought, I believe, was okay. This is hard to remember. It was either Metro Bank or ISM, which is now Ditto Holdings.
Oh.
Yeah. So interestingly, ISM was tradable back then, although not as hot compared to back in 2018. But yeah, that was one of the first experiences I had, and it was a expensive lesson, I would say.
How old were you when you started trading, like actively trading?
I was 18 years old when I started trading.
How old?
18 years old.
18, okay. So we will go to the rapid fire. We're too serious in our questions a while ago, so this is not going to be required for your explanation, just on top of mind. For bull market or bear market, what excites you more?
Bull market.
Okay, blue chips or growth stocks?
Growth stocks.
Charts or fundamentals, if you could only pick one?
Fundamentals.
Short-term trading or long-term investing?
Long-term investing.
Cash dividend or stock dividend?
Cash dividend.
Risk taker or safe player?
Safe player.
This Jollibee or AGI?
Sorry?
Jollibee or McDonald's stock?
Jollibee. I like Jollibee. I like Jollibee food too.
First thing you check every morning, global markets or the PSEI?
PSCI.
Philippine peso or US dollar for 2025 positioning?
US dollar.
If you had 1 million to invest today, where would you put it?
Dividend paying stocks like RCR.
Okay, that's really your favorite, huh?
Yeah, for this year at least. For now.
For now. Coffee before trading or after market close?
Before market.
Manila property or Philippine stocks?
Philippine stocks.
Biggest win in the market percentage-wise?
Sorry, can you please repeat?
Your return, your biggest win.
Oh, biggest win.
Yeah, percentage-wise.
100%, 109%.
Oh wow. Accurately. One stock you secretly admire but never buy?
That's tough. Aboitus Power. I currently don't have Aboitus Power.
Okay. So fill in the blanks. Money follows you when blank.
Sorry?
Money follows you. This is not about the market, but in the concept of money. Money follows you when blank.
Everywhere.
Wow. And then, last but not the least, if you can complete this sentence, money is the root of all blank.
Happiness.
All right. Thank you so much, Franco Fernandez, Equity Research Analyst of Dragonfly, for sharing your market outlook, stock picks, and golden rules for investing in 2025.
Thank you so much.